And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 3rd of April. And obviously, most people are hiding behind the sofa. Everyone's hiding behind the sofa because Donald Trump is throwing his tariffs around. Markets are falling out of bed. I think the other day I said on this podcast that Tesla could be the next AOL. I think my prophecy is starting to come true. But I'm a very happy boy, as I think you are, Phil, as well. How are you, Phil?
Very good, Andrew, I have to say.
I knew that, actually, because we're both in the office today. We're sitting in different studios. I didn't know you were right, actually. But now the listeners know as well. That's even better, isn't it? So why are we happy? There's a really good question. I'll tell you why I'm happy. There are two things that are making me very happy at the moment. One is that yesterday I went to Coventry. Now, I don't mean that in the terms that some people have sent to me today. I actually went to the physical city of Coventry, a city full of roundabouts and ring roads. But I went there to see the launch of Auto Cargo by Aurrigo. And this really does excite me. We've spoken about it a few times on this podcast before. But basically, Auto Cargo is the cargo version of their Auto Dolly, which is the autonomous baggage handling system airside. And the reason this excites me is that basically airports have got to become cleaner, more efficient, etc., and autonomy is the way forward. Clearly, for airlines, it's quite difficult to go green. This helps the airport go green, which is the first step in it all. But these guys really do have a... Unique isn't quite the right word, because the Chinese are doing it as well. But at the moment, you sort of have to decide you want Chinese or Western, or I don't know, maybe it's Chinese or European or American. I'm not quite sure. Actually, if they are successful with this, they will build them in America as well. But the point is that this is going to happen, all right? All of the little trolleys and things, and probably the buses, etc., that you see whizzing around an airport are going to go autonomous. It's very easy. It does take a bit of time because those aeroplanes that sit there are terribly expensive, Phil. And so the airlines that own them are quite nervous about what comes and parks alongside them. Quite understandably so. But there's not a problem. This goes even further, actually. One of the bits they've got that really excites me is their autonomous vehicle that goes around the perimeter fence and checks that no one's making holes in the perimeter fence or doing something wrong on the perimeter. Clearly, it'd be great to use a drone, but you can't use a drone on an airport because of the obvious reasons. So they can do that as well, which is a phenomenal capability. So I am very, very excited by this company. The reality is, if this was a private equity company in America, Silicon Valley, it would probably be on 100 times the valuation it's on in the UK market at the moment. Its valuation for where it is all wrong. I understand why. The UK market is terrible. Small caps are a disaster zone. But this is really interesting. This is the future. So that's been making me very happy going to their launch yesterday. And then, of course, the other thing, which you know all about, Phil, I may ask you to give some details, although I'll probably say it all myself anyway, because I haven't bought that, was that on Monday, we announced that Caterpillar had put in £5 million into Equipmake. Now, we've talked about Equipmake quite a few times in this podcast. Bringing Caterpillar in is phenomenally good news. The main one being that, actually, I don't mean it rudely, but it keeps the company going. But it'll actually also accelerate the growth. Now, some people in the market went, they come in, it's a convertible bond, the terms are quite harsh, blah. What they're forgetting is this. In the last 6 months, first of all, because the company's finances have been quite stretched, because a partner that they had been talking to, through us again, actually, for the last 12 months, pulled out at the last minute, customer orders have been quite difficult because everyone's gone, let's just see if they do get through all of this, quite understandably. So, of course, first of all, you've probably got sort of 6 months backlog of orders to come through. So you could see quite a lot of good news coming along. But then also, why have Caterpillar done it? They haven't done it because they just want to make an investment. They've done it because they want to do business with Equipmake. So you'll actually, I think, see a lot of business coming from Caterpillar for Equipmake. And then, of course, there'll be a lot of other global companies that have gone, hang on a second, Caterpillar, who are a really good name, think that Equipmake is really, really important. We should probably be talking to them too, because actually if they're using them, we should be using them. So actually, this deal is phenomenally good news for Equipmake, and it's now an absurdly low share price as well. So there's two absurdly cheap stocks. But also, we were very pleased, bringing £5 million of money like that in quite a stressed situation is in a very short time space as well. I think shows a lot of credibility for VSA. I'm pumping up VSA at the moment. Obviously, last year, that was this year. Last year, we brought in the National Wealth Fund into Invinity Energy Systems. I know the share price hasn't been great. We'll talk about that a bit as well on this podcast. But we're doing a few others as well, these strategic fundings. It's actually, with the current state of the markets, it's quite a good thing to do. And actually, it's something we're really good at VSA. It takes time. It takes a lot of work. It takes patience. Most brokers don't like that. They just want to do a deal. They're on a rabbit cage, not a rabbit cage, a mouse cage, a rat cage, whatever. They're spinning that wheel. They just want to do deals. If it's going to take more than 2 weeks, forget it. Move on to the next one. We're very happy to work with companies for years and years and years to try and get the right shareholders and the right shareholding structure. And I think we're proving how good we are at it. I'm going to keep going for that. Right. Can I keep going?
You carry on, Andrew. That's fine. Yeah, absolutely.
Well, I did touch base briefly there on Invinity. I'm the first to admit the share price has not been good, and I can only apologise. I mean, most people know I've put my heart and soul into this company over the last sort of 10 years and taking it from a red tea, merging with Avalon. I did that deal, bringing in the National Wealth Fund. I've raised probably over £200 million for the company over the last 10 years. My heart and soul really has gone into it. I'm also a fairly major shareholder myself. I think I'm larger than certainly all of the non-execs are. It is incredibly disappointing to see the share price reduce. We have been putting on a roadshow this week to try and get the message out that all is fine and dandy in the garden. All is fine and dandy in the garden, by the way. But what's actually going to make the share price move? That's what everybody really wants to ask. And that is the key question. I mean, the reality is, there's an old saying, isn't there, Phil? Long and wrong. That's where we all are as shareholders at the moment. But we may as well hang on in there because it does look, with the cap and floor that's been announced, and if you want, you can give a little explanation on that, that the reality is that the UK market is going to be ordering a huge amount of long-duration energy storage, non-lithium. Now, there are a few other non-lithium players. This a zinc bromide company from America is pitching in, I think. You've got some CAS, compressed air. That's quite tricky. There is heavy water hydro, but that's not really developed. So, in other words, frankly, if Invinity didn't get a big chunk of business out of this, then we really are all doomed. But they almost certainly will, thanks to the government having to place this order effectively. So I think probably nothing else. I hope there'll be more good news, actually. I really do. But stay patient. Stay in there for another few more years because it is going to come. It will happen soon. Well, pretty soon. Anyway, that's sort of. You've listened to some of the presentations, Phil. Careful what you say. They are a corporate client of ours.
Yeah.
Have you got anything you want to add to that?
Well, I think the cap and floor, because in the UK there's 1.5 gigawatts of battery storage on the national grid. The majority of it's lithium-ion batteries, and the majority of it will generate for up to 2 hours, but a lot of it's less than 2 hours of generation, and that's within a day, from charging to discharging. And long duration energy storage is all about being able to generate for a lot longer during the day. And the reason we want to do that is because at the moment, for longer periods, we're using gas, which is hugely expensive, and as renewables are growing, we need more longer generating assets outside of gas, and batteries are seen as a way forward to do that. And Invinity's got this technology that can generate for hours at a time within a day, and hence it's applying to the government's cap and floor scheme. Now, their tech is more expensive than lithium. However, it can operate for many years longer without wearing out, and it has this long duration performance, which is quite special. And the cap and floor scheme is to make projects commercially viable, putting a cap on the maximum revenue that project owners and battery owners can earn, but also a floor so that they can actually make a profit and get these assets financed. So the cap and floor scheme being introduced in the UK is very, very important. They're trying to encourage the government long duration assets, and that includes flow batteries from Invinity. And as Andrew says, some of the technologies like zinc air and compressed air. So it's good and positive for Invinity.
Yeah, look, and they're still winning business in Hungary. There's some quite interesting stuff coming out in Italy. America is still there. They'll need to sort out how they did the manufacturing now with Trump behaving the way he is. And you know what? The funny thing is, although I've just said what I've said, sometimes you see with these companies, you walk in one day, you have absolutely no reason at all. They've just doubled in share price. Because when stocks get this bombed out, that's just what happens sometimes. So who knows? May walk in tomorrow, next week, next month, double the share price. Anyway, that's why I'm happy. Everything's sort of tickety-boo, should we say, at the moment for what we're doing here at VSA. As I said, markets are unfortunately falling out of bed. C'est la vie. Right. Any other sort of big picture type stuff you want to...
Yeah, I guess let's just talk about those tariffs. I mean, the impact on the UK was it 10% tariff, I think, that's being imposed. The biggest impact for us is on the car industry and on the pharmaceuticals industry. So it's the automotive industry, cars in particular, and car manufacturing in the UK that's will be impacted. So I think what we'll see now, Andrew, is trading statements and results will be commenting on any impact on the tariffs that's going to come through. But from memory, in terms of listed companies in the UK, we don't have too many that are purely like automotive, exposed.
You know what? We get this. We had events where every company uses an excuse for their profits warning. I'm sure somehow Tim Martin at JD Wetherspoons will be able to say in a statement, because he has some amazing statements, that the tariffs have hurt his pubs and Donald Trump isn't drinking beer there anymore or something. Go on, Tim. You've got to write something up about it, because we do love what you write. But you're right. A lot of people will use it probably as a bit of a way of jumping on the bandwagon and blaming Trump's tariffs for why their profits aren't quite as good as they should be.
There we are. Well, we'll look out for that. Right. Well, IPOs, Raspberry Pi had results this week. So Raspberry Pi was an IPO in June of last year, I think, Andrew.
Yeah.
And I was just looking at the IPO share price was 280p. And I don't know if you've got your screen open, but I think it's about 490p now. Now, they reported their full year results, and they said it's quite an interesting set of results here. And this is getting back a bit to your message on patience with things and seeing through. Now, they had discussed previously issues in terms of supply. And some of this, because Raspberry Pi make, it's mini computers that they make, aimed at the industrial markets, but also the engineering markets and enthusiastic markets. I mean, Raspberry Pi are fantastic. It really does get people into computing. And they have their own charity as well. And they noted, and this was just in their full year results, that they've contributed $230 million. There you go, to the Raspberry Pi Foundation in the UK since it was founded. Anyway, back to the full year results. Revenues were down by about 2% to 260 million. But what was notable was the profit before tax was down from 38 million to 16 million. And a lot of it was to do with, obviously, an IPO cost, but it was to do with this business of supply, because clearly they've got fixed costs in there, and if supplies and core components aren't coming through, then you can't make the profits you expect. Nonetheless, what was very interesting is that those supply chain issues are being resolved, and they're seeing those clearing, and their adjusted earnings, EBITDA, was 37.2 million versus 36.6 million. And with that, the share price bounced up on the day. So that was very good to see. And it's one of the few tech companies that are listed. And EFT, there was an interesting article in the Financial Times on this, and I must reference it, and it's on the valuation of Raspberry Pi. Because obviously we do look at valuations very closely. And they quoted it as trading 28 times its 2025 EBITDA. And the FT is quoting from LSEG and S&P Capital IQ data. And 26 estimates it's trading at 21 times. And it's saying that the forecast for EBITDA growth is strong and supports in part valuation, but as they rightly say, there's an element of everyone, what was it, quote, everyone loves a good narrative, investors included. There we are. So it's nice to see a good tech stock in the UK and performing on the market.
Well done, then.
Yeah, well done, Raspberry Pi. Right, yet another takeover approach. This time it's Alphawave IP Group PLC. Ticker is AWEV. So this is semiconductor IP, Andrew, an area you know much about from your days working on ARM. And their IP is involved in 5G wireless infrastructure, data networking, autonomous vehicles. So this is all semiconductor communications IP that they license out. They had, and I better just be careful on how I quote my sources here. Yeah, there's a Reuters article. This is on April the 1st, wasn't an April Fool's article, and they said that SoftBank owned chip tech company Arm Holdings was buying into Alphawave, or recently sought to acquire, quote, Alphawave. And then on the 2nd, on the Wednesday, it asked its shareholders to take no action following an announcement that US semiconductor maker Qualcomm Inc. Was mulling a takeover offer for the listed company. What's also interesting is this: the market cap on Alphawave IP at the moment is 1.2 billion, and I was looking at its last trading results, and its quarterly revenues in 24 were $99 million. Our bookings are $185 million, and its full year guidance is for EBITDA of $50 million and £1 billion valuation. So, my word, it always shows the worth of semiconductor IP if you've got the right IP. Very, very interesting what's happening there.
Good. Keep going.
Right, well, too many, results out this week, Andrew. Corero Network Securities, one that we've commented on before.
Yeah.
CNS is the ticker, 82 million market cap now. Shares are up by 63% in 12 months. So this is software for security. It's distributed denial of service, DDoS protection. This is sort of protection where if you inadvertently let a malicious line actor into your systems, they just swamp your systems. Their software protects companies from that type of attack on their systems. They've reported full year results in December with revenues up by 10% to $24.6 million, and their EBITDA up by 42% to $2.5 million. Order intake was up as well to $28 million, and also they, I think, got a decent cash position. Yeah, year ended with $5.3 million, so more or less flat on cash from the prior year. So seems to be continuing to go very well for Corero Network Security. And that, just in terms of general trading, the other thing I did spot, Andrew.
Curries?
Yes, curries.
No, I don't mean Indian ones. I mean,
No. How can we miss curries?
Yeah.
Exactly. So folks are buying tech quite clearly in the UK. And this was a trading update from Currys, and they're expecting their adjusted profit before tax, expect to be 160 million, up from prior guidance of 145 to 155 million. And it said that with less than 5 weeks of the financial year remaining, it's adding like-for-like sales growth in the UK and Ireland, and particularly the Nordics, which were an area where apparently they were suffering a bit in that. And with that, the shares jolted up today. I think they're up by about 14%.
Yeah, I mean, Up Today is doing very, very well because it's not a great day. Investors aren't particularly happy. But, I mean, the place that most of the money is likely to come out of it is America. Not just because America at the moment is in trouble, but the dollar, it's already very weak against the pound, 131.70. But it is probably going to go weaker. I mean, personally, I think it'll go to about 150. I think it's partly what Trump wants because obviously it makes it it has advantages for exporting. Yeah, can't be bloody imports and exports the right way around. So I think it's a bit of a tactical thing, but obviously you don't therefore want to be owning US assets. So I think it doesn't take much money to come out of maybe US tech to then switch into say UK and European tech, and you could see a massive move in certain parts of the market. So actually now is not necessarily a bad time to be looking at the UK market on that basis. I mean, we know a lot of retail investors were very heavily exposed to the US. They were all riding the wave. They probably don't want to sell now because no one likes selling when things have come off the top. But unfortunately, I think they're probably going to go lower. So the time is now to do that asset switch, just as it was absolutely right, probably 10 years ago to get out of the UK and go into America. The only other place, of course, that people are going is commodities are looking pretty good at the moment. Even they're coming off their top slightly. Everything is going down today. Yeah, that's probably enough. Just one I would point out, purely as a trading point of view. We quite often talk about SSE, and I talk to my clients a lot about SSE actually, partially because I own it. But I'm a long-term investor, which is really annoying because it's one of the best trading stocks I think in the market. And we often on this podcast go, it's fallen down to whatever price, you should buy it. And look, it's got close to this price, you should sell it. And we've been pretty accurate, on the buy and sell tag. It did fall below 1,500, and it was clearly far too cheap. It's now on the way up. It's at 1,660, and it will probably get as high, as long as the markets don't fall out of bed, towards its last peak of 2,000. So that's a decent amount of upside. But yeah, look, it's a trading stock really, SSE, although the long-term trend is from the bottom left-hand corner to the top right-hand corner. So it's actually a good long-term hold as well, which is why I just sit with it. I haven't got the time to trade it. But yeah, SSE is now jumping up, and the momentum buyers should buy it at 1,660 and run it up to 2,000. There you go. There's a little bit of trading thoughts for you. Don't often do that, do I?
No, you don't, Andrew. And
it's only because I'm in a good mood, you see. I'm giving people great ideas.
Oh, that's excellent. Well, there we go. That's probably a good note to end on.
You do have to be careful giving you good ideas on this, actually, because I did meet someone the other day who said, not on this podcast, but on another podcast, he'd actually listened to our advice.
Oh, right.
Oh, the good news was he'd almost doubled his money. So...
Well, there we are. Well, in which case, we ought to just add in with SSE that we do not cover it from a research point of view or have a recommendation out on SSE.
Yeah, all the disclaimers coming out there, as usual, all the stuff. Feel free to bribe us. No, sorry, to compliment us, tell us we're talking rubbish, give us ideas, ask questions. We love it when we get all of that in. But we'll be back next week. Thanks.
We will. Chat then, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.